Absolutely. I mean, there are many fintech platforms that are undertaking intermediation that would traditionally be done by commercial banks and also providing low-cost digital payments to the masses in a very easy way. But the real legacy of Bitcoin is not going to be that cryptocurrency itself, but the blockchain technology, which I think is going to be fundamentally transformative in the way that finance is done and in the way we conduct our day-to-day transactions, like buying a house, buying a car. A lot of this is going to be intermediated much better using blockchain technology. Now, it turns out that Bitcoin's use of the blockchain technology is not very efficient. It uses a validation mechanism for transactions that is environmentally destructive, that doesn't scale up very well. But there are new technologies that are developing, new cryptocurrencies that are using blockchain technology much more effectively. So I think the promise of decentralized finance using blockchain technology is a real one, but Bitcoin itself may not last that much longer.
And Dr. Prasad, it's almost impossible to argue with anything you're saying. Thank you, by the way, for the clarity, because people are confusing the skepticism of some of us and the journalistic community of Bitcoin to the skepticism of fintech, and they're completely different things. And I think you're alluding to that as well. But there's a great lie out there, isn't there, amongst many Bitcoin adherents. They're pretending they think it's all about what transactions it could power in the future, when what they really want to do is just see an asset go up. But no currency in history has just gone up forever and maintained success as a mechanism of transition of goods and what have you. For instance, the dollar hasn't, the yen hasn't, the pound hasn't, the euro hasn't. Surely there is a great lie out there that actually people who hold Bitcoin just want it to go up rather than have it for more transactions.
That's right. With any asset, the question is where is the fundamental value proposition? And given that Bitcoin is not serving well as a medium of exchange, I don't think it's going to have any fundamental value other than whatever investors' faith leads it to have. But there is an interesting element of currency competition that it has set off. There are stable coins now that could, in principle, create more effective ways of transacting in basic ways. In addition, I think these cryptocurrencies have really lit a fire under central banks to start thinking about issuing digital versions of their own currencies. And that could be good in many ways in terms of providing an additional payment option, a low cost payment option that everybody has access to, increasing financial inclusion, and potentially also increasing financial stability. So again, much as we might not like Bitcoin, I think it has really set off a revolution that ultimately might benefit all of us either directly or indirectly.
And that is absolutely, again, a fascinating point. But chapter 9 of your book, and I think alludes to that there, central banks run the gauntlet as well. Will the central banks allow independent competition, or will it be central banks that monopolise the use of digital currency?
So as an economist, I think competition is a good thing. And what I think we're going to see is a bifurcation of the roles of money, which now serves as a medium of exchange, a store of value and so forth. But one can think about more efficient ways of using even central bank money, say using fintech technologies or using stable coins and other cryptocurrencies that derive their value from being backed up by fiat currencies issued by central banks. But my view is that central bank currencies are going to remain dominant as stores of value.